you missed your mortgage payment, and they foreclose on you 3.5 weeks later.
No way.
So in Texas, you miss one payment, you lose your house 3 weeks after your. So if it's late on the 10th, you lose your house on the first.
Washington, it's like 180, 200-day deal.
Yes. Oregon, California, Nevada, Washington, everywhere I had been, it's a long time. So in Texas, the reason so many people got foreclosed on with equity is they'd be like, you missed a payment, you're out. And so they're like, what? And they didn't have time to sell it, or they'd like try to put it on the market and they'd get an offer, but it would sell too fast.
Welcome to episode 377 this week, guys. We have Aaron Amuchastegui on the show this week. I am in a mastermind called GoBundance, which if you guys listened to, I think it's 5 or 6 episodes ago, we had the CEO of GoBundance on here. And so I'm in a mastermind with Aaron. And I've seen Aaron for quite a while on Instagram. He's got like 10K followers. He owns Roddy's foreclosure service down in Texas. He was a big investor in California and then moved to Texas in 2015 after he went through a lot of struggles. He actually lost everything when he was in California, and then went to Texas in 2015 and started buying a few businesses and started buying a ton of properties. He's now buying full subdivisions, 100 houses at a time, and doing a lot of really cool things. I think it's just a testament to no matter where you're at, if you get beat down, you can build back up, that you just keep pushing forward in this business. And so really, we had never talked before, and I just wanted to meet him. I wanted to be friends with him. And so we just kind of said, let's do a show where we just talk and introduce ourselves to each other, have a conversation, and just see where it goes. And so we hit record, and I think it's going to be a really good show. So really quick, I'm not going to talk a lot about what I'm doing this week. I'm actually going to just cut into something that I shot last night for my Instagram. And I think it is a really cool thought process that I had. And it's about this book that I've been reading. And so it's about 5 minutes, 5.5 minutes. And I think you guys are going to really like it. So anyway, hope you guys have a great rest of your week. Have a safe 4th of July weekend and enjoy some time with your family. And we'll go ahead and listen to our sponsor and we'll get into it. What's going on, guys? Hey, I want to come talk to you a little bit about this book that I've been reading with my son. And hear me out here for a second, okay? I was talking to my counselor today, and we were going over some struggles, and I'm asking the questions, why do I do things that I do? Why do I do it that way? Why do I struggle with insecurities in this realm? Why do I struggle with ego? Or why do I want to build this business? Or why do I want to do these things, right? And we came down to the root in me is I want to be the guy. When I walk into a room, I want to be the guy. I don't want to have to introduce myself. I want people to say, oh, look, that's Elliot. But then the question is why, and how do we get there if that's what I want to be? But what is the reason behind it? So we'll dive into that, maybe another time. But it got me thinking a lot. And I actually brought this book out and read it with my counselor because, I look at making money and doing these deals as not, I want to make more money. We live a pretty modest lifestyle. We have a $300,000 house. We have paid for cars, things like that. We're not living high on the hog. We put a lot of our money back into our deals, but I have this deep-seated to put points on the scoreboard, and money constitutes points on the scoreboard. But why? If I want to run the score up, does it matter? And so you see all these people on Instagram or TikTok or social media, and they're always talking about bigger, better, do all these deals, make all this money, look at this big team, grow, grow, grow. Sometimes it might not be as good as it looks from your perspective. Everything on an Instagram world is totally different, right? So we all deal with these insecurities, these struggles. I'm not good enough. I can't do it. This person has this and this person has that. But I just want to read this book. And, I bought this book a couple months ago when I was in San Diego with Monty. And I read this to him, once or so a week. I think I've read it probably 3 or 4 times. And every time I read it, it gives me chills. So if you have kids, definitely read this book. So I'm going to read a couple things. I'm going to share my screen here really quick and just hear these words. I'm probably not the best reader, but go ahead and just hear these words of what it is. Just stick with me here. I think it's really, really important. So, oh, the places you'll go. There is fun to be done. There are points to be scored. There are games to be won. And the magical things you can do with that ball will make you the winningest winner of all. Fame. You'll be famous, famous as can be, with the whole wide world watching you win on TV. Except when they don't, because sometimes they won't. I'm afraid that sometimes you'll play lonely games too. Games you can't win because you'll play against you. All alone, whether you like it or not. Alone will be something you'll be quite a lot. And when you're alone, there's a very good chance you'll meet things that scare you right out of your pants. There are some down the road between hither and yon that can scare you so much you won't want to go on. And I think that, guys, is the fear. You know, we have this social media world, we have this, everybody's got this business, or this guy's got this podcast, or I want this. If I just do this, I'm going to be happy. And so the key in this business, and I think in life, is you got to love you and understand who you are as a person. And your business and ideas will start flowing because you build these businesses around who you are and what you're happy doing. Like, I'm the happiest when I'm talking to sellers. I love that. But right now I'm not talking to sellers. Right now I'm running a team. My team's talking to sellers. I'm doing the call center, but I do talk to people in the call center and other clients. So I'm growing that there. But I'm an idea guy too. I have these huge ideas. I want to own 500 units in the next 18 months. I want to do development and land deals. I want to have this call center that goes just gangbusters. I want to sell data. I want to do all these things. But is that really what I'm looking at to make me happy? So, guys, just keep pushing, keep working on you as a human being, as a person every day. We can get better each and every day. But, you know, I would highly recommend, even if you don't have kids, just get this book. It's like $8 and just read it, because there is so much value in this book. You know, everybody's talking about, you know, get this huge book. I got all these books back here that I read, and I'm always ordering books, but I've actually almost gotten more out of this book and working with my counselor and working on myself from what the simple thing says in this book than I have out of a lot of other ones. So, guys, I think you're really going to enjoy it. Just keep pushing and you'll find a way. Build a business that you enjoy with doing it with people who you like hanging out with, and the sky's the limit. What's going on, Real Dealz listeners? I got a guy that we just met 5 minutes ago. We actually were introduced from some friends, but we thought we would just hit record today and have a conversation. It's Aaron. You got to pronounce your last name. I have a hard time with.
If you nailed that, we were going to instantly be best friends. So,
yeah.
So last name is Amuchastegui.
Amuchastegui. Okay. Hopefully I didn't screw that up. So you're out of Texas. You own Rodney's, like, you're a foreclosure company from what I've seen online. You love buying rentals. You love flipping houses. You just bought a title company. Your wife is really big on a 5-hour school week of doing school differently with your kids, with your family. I'm having experiences other than a lot of things. So I've followed you on Instagram for the last year probably, and then I joined GoBundance. You're in that as well, and I saw you in there. I was very happy to get connected from Danny. So did I hit everything on the head? Are we good?
Dude, you have done your homework way more than I would have expected. That's awesome. Your name is much easier to pronounce. So I'm going to say, so like, that was totally unfair. So I'm going to win the name contest. So Elliot Smith, I mean, your name is super easy. Aaron would just take you a little bit harder right now.
No, it's Samimite. May.
Yeah. So you're like the T is silent.
Yeah.
The T is silent. I think what's the most fun about this call is social media is so different than it used to be. Maybe it's not different than it used to be. In my mind, it's different than it used to be. Because I remember when I first saw MySpace, I'm old, Facebook, some of those things, and was like, I didn't see any value in it. The value was like, hey, I can catch up with some friends and see some pictures.
Yeah.
And now it really is this opportunity to like have your voice be heard. And you get the opportunity to follow people whose voices you like and who can move you forward. Like, people can instantly make friends, have mentors. And so it's awesome that we get to sit here and chat. It feels like we know each other a little bit already from some of the stuff that we've seen and been following. And even before this, we had been chatting about random questions and posts. And like, you showed some pictures of some of the flips you were doing. And I was like, oh, that brings back some memories of these. You're like, no, this is how bad it really was.
Yeah.
So it's really cool. And so for listeners out there that like on the podcast, on your podcast, on my podcast, I love to encourage them to like reach out to people and go find them. And it starts with like following people and messaging, and you'll never know what friendships are going to develop all over the place. So yeah, I'm super excited to talk to you too.
And lead with value too. That's one of my biggest thing I drive home with, like, say I want to be I want you to mentor me, or I want to learn something from you. lead with value. I get people that reach out to me all the time, and some people are like, just tell me how to get started or this or that. And there's nothing there. They just want to take. But then I have guys like, I'll talk about my drive failing on my, that I recorded my podcast last week. It failed. Somebody will reach out, be like, hey, I know how to fix those drives. Let me help you. And then it starts the conversation, or, hey, I heard you talk about this or something like that. And it's like, I really appreciate it. Ask those kind of engaging questions, and you're going to get people to respond really well. Like I don't respond when people are just like, help me start. I don't know what I'm doing.
Yeah. I do love it when people lead with value and they say, hey, here's what I'm really good at. I would love to help you. I posted a thing about our CRM, and I had somebody reach out and go, hey, I'm a software guy by my day job, but I also love real estate. Like, let me check out your CRM. Let me go through some of those different processes. And so, yeah, leading with value to reach out to people. And then when you start creating your own content and pushing it out there, lead with value. And then also be confident in knowing that you have something that's going to add. The internet is so big that you have something that will add value to someone. There's times when you mentioned the book that my wife and I have, and kind of her 5-hour school week that she pushes. At first it was like, what's the point in sharing it? But the whole idea was like, well, if you could change one life, if you change one life with that, it's worth it. And so often people say, I want to do social media more, but I'm afraid that I don't have anything to share. Or I interview people on the podcast. It's like, no, everybody has something to share. The world is so big. Just share what you know, add value, and you'll be amazed at how many people love that.
Yeah, because everybody's good at something. Well, I mean, unless you don't do anything all day. But like, I'm really good at X. Well, you're really good at Y. And Danny is really good at Z, right? Well, I need Z in my life right now, and he needs X in his life. Well, let's just do something. We can help each other.
Everybody is great at something, and everybody's bad at something.
Yeah.
Like, everyone has a need. No one's life is perfect. On social media, we share our highlight reel mostly. Like, we share the best stuff. And that was, you and I laughed about that at the beginning. We're like, well, we don't really know what you're going to get but I tell people you should lead with your highlight reel, because that's what we do all this for the good moments. We don't go through life for the bad moments. We don't be entrepreneurs for the bad moments. We don't buy a house. We do all this for the good moments.
Yeah.
Right. We push hard for those. So you got to remember the good moments. Otherwise the bad moments are too hard.
Yeah. Or I live for the funny moments. I'm a jokester. I like to make jokes about everything.
Yeah.
Life's too short. So what do you have how many kids?
We've got 4 kids, 3 girls and a boy.
Okay. How old?
My girls are 13, 11, and 10.
Ooh.
Oh, my daughter just turned 14 4 days ago. So she's not listening to your podcast. So 14, 11, and 10, they'll give me a hard time. My boy is 5. And man, girls are different than boys. My boy is so different. We had our 3 girls. I wasn't sure if we were ever going to have kids. 3 was plenty. My wife really, really wanted to have another kid. And I remember thinking, well, if it's a boy, this is going to be a lot of fun. And if it's a girl, it's going to be super easy.
Yeah.
Because I've already had 3 girls. I know how this is. Everything in our house was pink and princess castles anyway. And we added a boy to the mix, and he sure adds some fire to our life out here. But yeah, 4 kids, all sorts of ages.
I always heard that boys are harder at first and then they get easier, and girls are easier at first, but they get harder when they become teenagers.
Yeah. I think that's been our experience so far. Like the age he's at right now, we just have to keep him alive.
Yeah.
Right. Keep him he jumps off crazy stuff. Like I'll look in, and instead of watching TV, he's climbed up on the shelf next to the TV, jumping off to the couch, like at random times. Like, he's the one where I have to worry about poisonous snakes, because he'll go run outside, try to pick one up, you know, like so yes, boys are, I think that later in life, emotionally, if I do things right, he'll be a little bit easier. And the girls were much, much calmer when they were younger, much less spunk. And they also know how to really hurt you if they want to. So my little girls, I love them. So now as they get older, they know how to push my buttons if they want to get a rise out of me too.
That's funny. So
do you have kids?
I have a 2.5-year-old.
Boy or girl?
Boy. Yeah.
Awesome.
Yeah. He's awesome. Guy is so much fun. Yeah. He loves golfing. We go out all the time. He's like, but we went last Saturday or something. He came out. I start at 6 a.m, and then my wife will bring him out for the back 9. Mm-hmm. And I have a custom, like a little iron from USA Kids. But then he didn't have he used to have a plastic driver, but now he wanted to hit my clubs all the time. He's like, hit big one, Dad, hit big one. He always wants to hit the big one. I'm like, I don't have a big one for you. And you're not hitting my big one when we're on the course. That's for the driving range. If you want to mess, even though you shouldn't be hitting it. So I went and bought him. They didn't have any for his size. He's like 39 inches, 38 inches. So I went and bought the smallest junior driver I could with the biggest head. And then I had him cut it down to 23 inches, and I cut a putter down to 18 inches, and I got it. He's like, oh, big one. And so he just wants to hit the driver all the time.
Dude, that's so awesome. The effort you took for that to get to go play around, but you never know what kids are going to like. And if they naturally like something, you so got to lean into that.
Yeah.
And like go all in while they do. Cause it's way easier to like back up what they already love than try to get them into it. That you're super lucky that he's into it so much right now. That's cool.
Yeah. Or like, he was like, well, grab my hat, put on. He's like, I got your golf hat. I'm like, so I bought him his own golf hat. He's like, my own golf hat, his own Titleist hat. He's so friggin' pumped.
Yeah. That's super cool.
But he also likes cooking and playing cooking. So I bought him a cooking set too. So you know what? If it's golf, great. If it's ballet, great. Just be passionate. Have fun.
Yeah.
Hopefully it's not
whatever that passion is. Where do you live?
Eastern Washington, Tri-Cities.
Yeah.
Yeah.
You've been out there forever?
Yeah. Born and raised. Yeah. You're in Austin?
I'm in Austin now. I was originally from Southern Oregon, so I know that Pacific Northwest stuff and kind of the strange weather of all 4 seasons that we would get up there.
We're different. Eastern's different.
Yeah.
Are you, because you were Southern, were you like Brookings or like West Side, or were you?
It was east, so like Klamath Falls, so like just south of Bend.
You understand? Okay, yeah, higher desert, a little hotter in the summers.
Hot in the summer. Summers were nice. We get snow in the winters, so we get like all 4 seasons where we were at, and then we were in Northern California for a long time. I went down from in small town Southern Oregon, got to California, and that was really like the land of milk and honey. Weather was amazing. I didn't understand taxes and politics much yet, so I loved California more than anything. But I've been doing business in Texas now since 2015, and lived here full time for a couple of years.
I think your timing was pretty good,
dude. I had 2 bets of I was just like overwhelmed and trying to make singles. I had flipped 1,000 houses in California from like 2009, 2012, made a whole bunch of money. And then I lost it all in 2013. Like a very like quick, short story, like Blackstone, everybody came into my market. I kept paying heavy overhead. I was not willing to give up and close up shop until I couldn't make payroll anymore. So I lost millions in cash that we had. And I also didn't know any other investors, and I didn't know anyone else making money like I was. So nobody taught me how to like invest or save for a rainy day or anything. So I made a ton of money, lost a ton of money. In 2015, I discovered Texas, and no one was at auctions when I went out there on a fluke for something else and was like, oh, I'm going to try. So I started flying out to Texas, and I'd buy a few houses. And I was like, you know what, this time instead of flip, if I'd have just kept 100 houses of my 1,000, I'd be sitting pretty. This time I'm going to rent. So my really good 100% like God-given luck was so 2015, I started flying out to Texas every month. On average, I would buy 10 houses, and I would refinance them and put renters in them, and I'd do it again. And I said, prices will never go up in Texas because they never have.
Yeah.
So in this area, in this town of Colleen where I started buying, they had been the same price there for like 15 years, from like 2000 to 2015, never went up, never went down. I'm like, I'll just do a bunch of singles, and you do 10 houses a month. So in 2015, then 2020 hits, and you got a lot of houses that are only making $100 a month. You said they were never going to gain value, but the market obviously went up everywhere. Texas is kind of winning. Texas is one of the states winning the race right now. So timing was really, really lucky. And the cool thing about that was it was a bunch of singles. There's a bunch of really, really safe investments, like not as cool as like crypto and all the fun stuff and like stocks. That I do a little bit of that stuff too, but it's more gambling. But did some singles and then made my timing in tech. I ended up looking brilliant when really I was just being super scared and conservative.
That's funny. Speaking of gambling, I am driving a brand new 2021 F-150 Lariat because of my gambling with AMC options in January.
Dude, I sold. I don't know if you were on the GoBundance thing when I didn't have AMC, but I had GameStop, and in January I sold thousands of GameStop stocks after I just made like $4,000 or $5,000. And then the one day that it hit high, I'm like, here's my sale order, which would now be worth $1.8 million if I'd have waited another 2 months. Like it was crazy.
So I was swing trading AMC calls and puts from like October. And when I like to gamble, when everything shut down, casinos shut down. So I have fun money my wife gives me because I'm a spender. So I get, an allowance.
You have an allowance?
Yeah. And it's a good one. But so I started putting in stocks. And so I was swing trading call options. something the day I started reading this Reddit thread, the 27th of January, I started reading it. And I'm like, I got all these call options. AMC was at like $4.90. I had $3 and $3.50 call options in the money. So I sold those out and bought $4,000 worth of $22 January 22 strike 22 call options. I woke up the next day, ended up selling them for $47,000 the next day. And as I was still in the trade, I go to the F-150 dealership because it's my fun money. My wife was supposed to get the next car, but it's my fun money, so I can spend it on whatever the hell I want. And so I go there, and the trade in and buying it in my business, because my other one was in my personal, washed out the taxes. I said, hey, if this goes up, we're good. If it goes down, we're screwed. So you better sell me something fast. Yep. So I sold them as I'm test driving. It was the best thing ever.
You're like, could you take Bitcoin? Because like if so, when you do it fast. So does your wife have fun money too? Do you guys both have an allowance? And you're like, I think that's probably a smart relationship stuff. Have you done that for a long time?
We've done it forever. She put me on so I grew up with a dad that was a spender, and she grew up really poor. So she's really good at managing money, and I'm good at making money, but I'm also good at spending money.
Yeah,
so I'm good at
like that for sure.
Yeah. So we started when I first got engaged. I'm like, hey, you're really good at managing finances. Why don't you manage all our finances? I had a truck payment at the time. I was like $13,000 left. I wasn't only making payments, and I had no money at the end of the month. She paid it off in 3 months. She gave me $150 a week. She paid my truck off in 3 months. The reason we have all the rentals and money in the bank because of her. And so, but yeah, I mean, we still spend money on, like, it's not a hard and fast, like we only spend this much money every month for fun money, but like we go on vacations, we travel all the time, but just to go light on fire money. Yeah, we have some light on fire, but she doesn't do it. She puts it in her stock account and buys equities and, slow plays it.
That's funny. You're like, I'm allowed to spend this on whatever. You're allowed to spend that on whatever. And she's like, okay, I'm going to spend it on stocks because that feels awesome. That's like a match made in heaven for sure. Like opposites attract and opposites are good. The only time my wife and I had major conflict in our relationship was when both of us were doing the same thing. When we were both working aggressively, and it was almost like we were kind of business partners, but kind of in competition. It was like we were business partners, but also ego gets in.
Oh,
so she's like, hey, I made $15,000 on this commission. I'm like, well, it was my house, right? Like it was my flip, right? Well, I'm doing this better. That was like the only time. It is so much better when opposites are doing it, and I'm doing my role and she's doing hers. We're so much happier. Family's so much happier. Business is so much more successful. So how do you, when you're saying like you were buying puts and all that stuff, it's kind of like if people want to day trade, it's really simple to say, and definitely not financial advice because I'm trying to learn from you right now. But I think my understanding is if you want to day trade, you could buy stocks and you could sell stocks afterward. But if you're really planning to do that, people say you should buy options instead because then you get a bigger bang for your buck when it goes up and down and that sort of stuff. Is that a realistic thing, or is
options? Options are gambling is what it is. If you're buying equities, if you buy, say you buy $10,000 worth of Tesla, right? And Tesla drops 10%, you only lose 10% of your position.
All right.
You buy options, $10,000 worth of options, or let's say $1,000 worth of options, and Tesla drops 10%, and your option strike date of when that thing expires is really close. You probably just lost all your option money. You probably just lost.
Is that the worst thing that can happen? Is you just lose your $1,000?
Yeah, you just lose your $1,000. So like if I go buy, so like I'm in options, right? Some options right now. I have some just shares and then I have options, but like I try to buy farther out ones, but like you can buy really close ones in like close time frames. There's a bunch of different time frames, but the idea is if it is when the stock moves a couple percent, the options can move 10 to 20% based on sentiment. They can move. It's all based on like where they think the stock's going, how far your strike price is compared to the stock price. All these different things move it. So it's kind of hard, and it's basically a supply and demand. If everybody is bullish on the stock and they want to go buy options, then your option goes up. But if it might go up, but they're still not bullish on it at that price point, then you're not going to make any money. So, but worst case, you lose whatever you pay for the options. Worst case. Shorting, where you short stocks, where you're like borrowing shares and shorting them, that's where you can have like infinite losses.
Yeah.
Because
And that's because you have to, if you say like, hey, I'm going to sell you this many shares on this day, you'll have to buy those shares to sell those shares, right?
Yeah. Well, no, because shorting, and okay, I'm not an expert at this at all because I've never done, but shorting is like, I'm going to say, hey, Aaron, I'm going to borrow 100 shares from you or whatever. And then I'm going to go and I agree to pay you at $10 a share. if, at some point I could pay you $10 a share at some point. Well, then I take those and I go try to sell them in the market and drop the price of the share. So then I can go buy the shares that at $6 and sell them back to you at $10. So I make a $4 spread. Well, if that stock starts going north, like AMC and all these other ones, and I owe them to you at $10 a share, and now the stock's $60 a share. Well, shit, I owe you 50. Stock goes to 100. I owe you 90.
It's like borrowing lumber. So if you borrowed if you borrowed a bundle of lumber from somebody 6 months ago, and now you're paying them back, you're like, oh, that was a bad deal. It costs me way more to get lumber now. I think that these stocks are like buying houses, right? Like it can go up, it can go down. You might have some things that make it go way up or go way down, but they don't go to zero. And then options are probably a lot like buying businesses, because I've bought some businesses, and I remember when I first started transitioning from real estate deals to businesses can also go to zero, right? Whereas real estate is really like real estate, gold, are some of the only things that I say could never go to zero. And I mean, knock on wood, because I love both those things, but yeah, it's businesses can go to zero, options can go to zero. So I saw you on Instagram and you were posting pictures of this like nasty house, which is that is the most fun part about buying houses, is getting to share.
The problem with that one, that was a 24 unit that we owned that the tenant died in, and we were having to turn it over. So.
Oh, it wasn't even an opportunity moment. It was just look at how much money I lost today and how gross my job is. That sucks.
I don't even show. So going back to it, you're talking about segmenting your wife and your roles. So Christy and I almost split up because we fought all the time when we were running the business when we first started. So everything is very segmented. My job is to connect people, raise money, and buy deals and put those two together. She runs all the day-to-day property management. She lists all the properties. She does all the design. I do nothing with that. So only reason I showed up that day to look at it was because I wanted to see how nasty it was so I could post it on the Instagram, but I didn't clean it out.
Yeah. You're like, no, that's brutal. So do you guys do mostly multifamily?
We just started. We bought a 24 unit with 3 partners last year, an 8 unit with 2 partners that I put the deal together. So we got in less cash. And then we just bought another 25 unit with 1 partner. And then we have 2 duplexes and 6 single family houses that are ours. That's
awesome. You're cruising along. Is that all in Eastern Washington?
No, some of it's in Vancouver, Washington, because we flip houses there still. And then we closed on some dirt to build a 13 unit. And we have like a 60 lot subdivision we're working on. And then we have a bunch of other subdivision stuff in the pipe. And
yeah, subdivision going to be single family houses or duplexes or
single families.
Yeah, I'm super excited about that stuff right now. I was buying at auction, right? So I own the foreclosure company in Texas. So one of my stories is, I'm in California. When I first started buying foreclosures in California, there was no one at auction. There was 3 guys and there was hundreds of houses selling. We would literally all spend our money every day, and then we'd go try to find more money to go spend. And we'd try to find other people to loan us money. And back then it was 2009. The market was still kind of crashing. Stock market sucked. Everybody was scared of everything. And so finding investors was hard, but we'd spend all of our money every day. And then, taking turns, let's like, oh no, I'm not going to get out of my chair. You guys go ahead and get this one. Cause we were going to get so many houses.
Yeah.
2012, 2013, Blackstone, all the big hedge funds entered the market. Now there's hundreds of people at auction bidding for 3 houses instead of 3 people bidding for hundreds of houses. So we kept losing. And they were playing a different game than me, because I was like, it's not going to be a good rental. Well, they were playing the idea of it's below replacement costs. We're going to buy $1 gazillion worth of this stuff, and we know prices are going to go up. So when I got out to Texas, I had been out there. I remember thinking the only guy that was winning in California at the end was the guy that owned Foreclosure Radar. He's a good friend of mine now, but because everybody at that time that was at auction was subscribing to his software for $99 a month. So all 300 of those guys at every county were paying $99 a month to attend auction. I was like, he's the one winning. Only 3 guys ended up buying houses. So I was lucky enough to get to buy the foreclosure company that does the listings out in Texas. So I was still buying houses out here. I was buying 10, 15, 20 houses a month before COVID hit. And I also had my subscribers. And my thought was, one day the market will get so heavy, I will have a tough time buying houses, but I just need to own the product that everybody uses to buy houses. And that's what happened. Before COVID, I was buying a ton of foreclosures and still doing a great job spreading out all over. Love that business. It is like the most exciting, because sometimes you open the door and the house is perfect. And sometimes you open the door and it's completely wrecked. And sometimes I bought burned down houses. I bought all sorts of stuff, right?
Seconds, you buy seconds?
So I don't. Now there is a strategy
I've
behind
never
it.
accidentally bought a second.
I've never accidentally bought a second. I've bought the wrong house before. I've bought we've had houses where we drove it the morning of and it burnt down the day before and you see somebody else buy it. We've seen people buy seconds. When I started at the beginning, dude, I was so scared with title that we spend more time on title than probably anybody. We lose deals because I get scared of that when other people end up having problems with it. There's plenty of times I skip and then it works out. So we were buying a lot of houses and now COVID hits and now there's not enough houses going. So we get outbid. So I don't even go to auction right now. I bought like 3 or 4 since COVID started because they eliminated 75% of the foreclosures. But we started to find this big opportunity the last 6 months of buying kind of new construction, buying subdivisions. One of the lucky things that happened is the houses that we bought, 6 years ago, at that time, they were 10 years old. Now they're 15 years old. There were 2 or 3 times what we bought them for. So now we have an opportunity to sell those and trade them out for these new construction assets. And maybe our cap rate goes down just a little bit.
Yeah.
It's hard to find new construction when the cap rate's good, but we're buying new construction when the cap rate's good. We're getting to trade out that money into better assets that will now last. Right now they have a builder warranty and brand new houses are awesome. Like just the amount of stuff like new construction. So I bought a couple full subdivisions. We're adding a few hundred units. And then just now it's buying more land. So we closed today on a 60 unit duplex subdivision and it was brand new construction, fully rented by the time we closed on it.
Why would the builder sell it to you, the whole subdivision, instead of putting it on the market?
Dude, that's a great question as people try to figure it out. And it's all about money. So a Lennar, a Beazer, a Pulte, they won't be able to do any of these deals I'm trying to do. One of the developments in particular had 6 different builders in it, and each of them had 6 or 7 houses. So each 6 or 7 duplexes.
Yeah.
So 14 units apiece. So they all go to market on the same day. I buy all of them from every builder. There was 1 or 2 other people that got one. So in that, there's one subdivision where there's 60, 70, 80 units, something like that, where somebody else, there's either 2 or 4 units that won't be me, and I'm going to own everything else in that neighborhood. The reason that the builders do it is the banks that lend them the money will lend them until slab, but they would make way more money if they built them and sold them when completed. But the bank won't loan them the money if they don't see someone buying them. Yeah. So the bank loans them enough money to do the slab, and then they say, all right, Mr. Bank, here's my offer from Aaron and his proof of funds. Yep. I'm selling all these. Now you need to fund them.
Yep.
The funniest thing that happened in that subdivision is this banker called me and he goes, hey, I'm so-and-so. I'm the lender. I'm lending to all 6 of the builders in that neighborhood. And they all sent me your offer and your proof of funds, but you sent the same proof of funds to everybody.
Yeah.
So you're not actually just buying 3 million. You need to send me proof of funds of 15 to be able to close this thing. So he could fund all of those. So that was a unique problem happened this year I'd never seen before, but that's the biggest reason why somebody sells a new home subdivision to us, because the market's going up every day.
Yep.
And the best part about those, you find small builders, they need to sell them at when they break ground, because otherwise the bank won't fund them because they don't have enough money.
Yeah. I may not have heard of small builders that have their brothers, sisters, cousins sign purchase and sales agreements.
Yeah. Yeah. I mean, that's probably, but obviously these banks are paying attention because they actually looked at it and they said, well, let's go verify your, I've never had that happen before, but so I love those opportunities because with the market right now, if at closing time, the houses sucked, I would lose $5,000 or $10,000 a house. And so it's like now it's like buying short selling, right? Or now it's like buying puts or whatever options, on the stock market.
Options.
It's like options and shorts, because if the market goes down, I'm not going to close.
Yeah.
Or I don't have to close. Maybe I still will if it cash flows right. But what's more likely, by the time they finish these things, it's like 6 months after I started, they're worth $30,000 or $40,000 more because lumber has doubled since I started. Like they would never redo these. They hope I cancel so they can sell them for market rate.
Yeah. They're trying to find ways for you to cancel.
Yeah. I had one at the beginning offer to pay us to cancel. So it's a really unique, strange problem that only small builders have because in small towns, because they're funded differently.
Yeah. We'll run into that. So I'm doing development, and then I'm partnered with a developer builder. Mm-hmm. And so I help source deals, land, and then I source capital, and then he goes and does his thing. And I'm actually going to I'll get out at paper lots on some of them. We're 50-50 until paper lots. And then at that point, he can go do his thing. But I'll probably stay in and get a smaller piece of it on the other side too. But what I want to figure out, So my good buddy Artem has built 250 million of apartments in LA in like the last 6 years. But what they do is they go raise money, they build them, they refi them, they keep them. The money above the that they make above what they're into it, it's all tax free. Like, because you refi, you get tax free. So my builder can build stuff for, let's say, 105 a square foot. We can sell it at 170 a square foot on the house. Let's just say easy numbers. Well, I want to sell half the houses and then keep the other half at like as lower cost, if not zero cost basis, and then refi them out. But I got to figure out, how do I not pay taxes on the first house and the first half you sell, because it's all individual. That's kind of, I'm trying to figure that out, because it's not like an apartment where it's one building, right? Where you just do one building, one refi thing. So, but I like the single family duplex model because it's more liquid than a 25 unit or 100 unit.
Dude, that's my favorite part. You buy a whole subdivision, you get the value of scale of an apartment, but you could sell one of them at any time, two of them at any time. That also just makes the multiple higher because of how liquid they are. I think you could probably do a version of a 1031 exchange for what you're doing. There's also so much of the building cost is like overhead and like how cost gets allocated to one. So I think there's probably a way that like you
creative accounting.
Yeah. Well, if you sell part and then you buy the other ones in that same entity, right? Like if your ownership in part, there's got to be a way, because you are keeping it into a different deal, right? You're taking the money that you want, that you made, and you're putting it into a different house. That's the definition of maybe not the definition of a 1031. That's the reason behind a 1031, is so that if you profit on a house, if you reinvest it into other real estate, you don't pay profit on it.
Yeah. So I just got to figure out, because I have a bunch of doctors and lawyers that really, really like that idea. They want to put money in there because they don't want to pay tax. The issue is those guys, high income earners, they already pay way too much in taxes because it's all ordinary income. They can't really benefit from the real estate professional, taxable, cost tags and all that stuff. So, but if you can refi and they don't pay any taxes on that gain, and then they get some cash back, I think it would work really well.
Yeah. That's when I think a lot of doctors will have their wives become property. They'll buy a couple of houses, have their wives be the property managers, because then once you unlock that, it's legit and it makes a big difference. I was asking at my CPA, I was like, hey, I'm buying this new apartment. I want to be able to do some cost segregation stuff. Do I need to do it in this and this? And he's like, no, because you're a dedicated real estate professional. He's like, it's super easy, because there's nothing to prove on your side. It's like all your income is real estate only. It's fine. But yeah, so those value add opportunities are cool. If you can find a way to do the value add and get to keep it. The best way is through a refinance too. Just like you said, when you refinance something, I bought an apartment complex for a few $100,000. Years later, you add value, take out a $600,000 loan. And that extra 300,000 is tax-free until you sell it. Mm-hmm. That was how those big hedge funds did it in the single family space, how they did so well. A lot of their first bonuses were tax-free because they did the Burr method. They just did it with tens of thousands of houses. They spent hundreds of millions of bucks. Then they doubled the value. And when they refied, they could cash out and even pay so refinancing and being able to keep it that way before you sell it, you refi and sell it. There's got to be some allocation stuff there.
Yeah. Because I don't need more income. That's not, I obviously but I don't want to pay taxes. That's the biggest thing, right? I might, how do you be strategic? But then you have these, my wife said I can't talk politics anymore. People that may or may not work for the government, wanting to change the taxable ways that they do things. So, that's the challenging part, is making sure you're always ebbing and flowing, which I think when they change tax policy, it creates opportunities, because smart people are always going to find a way, to work around things.
Dude, if they want to change, I had a listener reach out and he said, we were talking about how could the government change the real estate market? And he goes, you know what, one of the things I said was, if they allowed everybody to sell, one or two houses right now without paying tax on the gain, like without having to do a 1031. And he took it further and was like, yeah, if you require them to build a house in the next 3 years. So any house you sell, you wouldn't have to pay taxes on the gain as long as you build a house in the next 3 years. So that gets stuff released now and then adds product on the market. And I was like, that's pretty brilliant. It'd be great if something like that came to government incentive to actually try to get more real estate out there.
Yeah, that's actually a really good idea. The only problem that I see is the regulations to build houses and the timelines to build houses is ridiculous.
Out in California right now, so California is a place where that's absolutely the reason nobody permits or does anything out there is because they just make it so hard.
Mm-hmm.
This stuff's expensive. It's like, make it simple and easy and people will fly in and get it done. But when you make a normal project take a year, it sucks. But they just did this thing where because of there's such a housing issue, they said right now you can add an accessory dwelling unit, so an ADU, in your backyard or in your garage, and they have to fast track your permit to deliver it to you in less than 30 days. So if you want to now add a house, they made all zoning available to have ADU. So as long as there was space, so now you can add a unit in your backyard, or you can convert your garage to a livable unit and they'll fast track you, and you have to have your permit in 30 days. And that was one of their ideas out there, was how they could incentivize people to add units.
Yeah. Even in our town, which is Eastern Washington, which is more red, usually it's a lot less red tape, very, less regulations. We were just talking about this subdivision in Kennewick, and it used to take 3 to 4 months from time, submitting plans, doing all that stuff to get stamped to go ahead and start moving dirt. 18 months it's taking them now. 15 to 18 months. West side, my buddy builds high-end specs, one up, one down usually. Literally that house takes him 6-7 months to build. He can pencil in there for 24 to 30 months to be on that property.
Dude, I think, the whole COVID, everything closing changed everything too. There's so many things like building permits, building offices just closed and eviction offices closed, like everything. And so now it's like, when will they go? When will it come back? How long will it take? And a lot of them are like, well, we're just not going to staff back up the same way anymore.
Yeah. What do you see going on in Texas right now, other than the market's on fire? Like, do you see inventory coming online? Do you see the foreclosures coming back? Do you see what's your thought process there?
Yeah, I see the demand is really, really high right now. And so with the demand so high, it's a great time to sell funky, weird houses because, there's always some houses that it's not about the neighborhood. It's just the house is so funky that the person's like, I can't deal with the dog next door, or I can't deal with stepping down into my living room and then up into my kitchen. Like there's always just some funky stuff, or having the bedroom right next to the kitchen or something. It's a great time to sell those weird things because people want houses so bad. They're willing to buy houses and then just completely do like renovations for the whole, like they'll buy a house for $400,000 and do a $300,000 renovation right now because it's so hard. It's easier to do a remodel than find land in good neighborhoods. There was one right around the corner from me that happened. So, they bought, it was a big house, but it's a big house on the golf course, like 4,000 square feet. And for the last 9 months, they've been adding a second story to it.
Oh, geez.
So like, I was like, that's like $1 million, $2 million remodel. What's going on over there? And now that they're almost done, I'm like, that was brilliant. I would have never thought about doing that in this neighborhood. So demand is really, really high in Texas. More and more people are moving here. There's no income tax is a big reason why. It's very pro-business. So business people are moving out here. It's very hard for me to have employees and run businesses in California. Everything costs more. And it was always like a battle just to be on the up and up. It was always like a battle. Like to follow all the rules, they made it hard to even follow the rules. And so that is what's pushing everything out here. And then there's famous people and there's Tesla and everything else. I'm seeing a super, super high demand. I think we're going to see in some cities prices where, now if you're in like downtown Dallas, downtown Austin, people are like, it's not actually cheaper than California anymore.
Yeah.
Right. In some areas, there's
price and property taxes. I mean, because you guys have higher property taxes, right? In Texas,
it's much higher property taxes, like double, but there's $30 and $40 million houses in Austin now.
Jeez.
I want to tell you, in 2015, there just wasn't.
Yeah.
And the people that buy those are the people that have 100, 200, $300 million exits and are like, no, this thing's perfect for me. And so that's reminiscent of like what you see in California. I saw some deals coming in San Francisco today that was like, hey, this house is worth 12 million, but they'll sell it for 9. And then you look on Zillow and there's like 50, $12 million houses within a couple blocks for sale. You don't see that out here. You see nothing. So demand is really, really high. Prices are getting really high in some areas where I think the demand will slow down a little bit. I think it's really going to push to the outskirts. More and more people are going to be within 45 minutes of Austin, an hour from Austin. The houses that I started buying an hour from Austin were never supposed to go up in value. Now they are, because Austin is a spot. Foreclosures, there's like 60,000, 70,000 foreclosures in this shadow inventory thing. And so that says, which means they were posted normally in Texas, I know we've been talking for a while, so I'll try to be really quick.
No, you're fine. I usually go like an hour and a half.
So 5,000 or 6,000 postings a month is in a normal, healthy market in Texas. Since COVID, there's been 1,500. So in a normal, like in 2019, when everything is awesome, 6,000 postings a month in the state of Texas. Since 2020, 1,500. So if you do that math, there's 4,500 a month of people that should be in foreclosure, but simply aren't because of foreclosure moratoriums. They haven't made a payment. They don't plan to make a payment. So you do 4,500 times, now it's 15, 16 months. We're up to like 60,000 in something. Then we went through and we looked at, June, July, August, the stuff that got posted last year that didn't sell. There's no status changes for 90% of them. Some of them did a refi. Some of them sold. 90% of the postings we saw over the last year are still owned by the person that was in default. So there's the assumption that they're in too. So now maybe we've got 70 or 80,000 people in this like foreclosure shadow inventory that probably are not making payments, but can't be foreclosed on until the foreclosure moratorium happens. So in one sense, you've got a bunch of product that's going to come on the market. The other side of that argument though, is they all have a ton of equity.
Yeah.
Like 30, 40% equity. Usually what happens out here is they tell somebody on the 5th, you missed your mortgage payment, and they foreclose on you 3.5 weeks later.
No
right?
way.
So in Texas, you miss one payment, you lose your house 3 weeks after so if it's late on the 10th, you lose your house on the 1st.
Washington, it's like 180, 200-day deal.
Yes. Oregon, California, Nevada, Washington, everywhere I had been, it's a long time. So in Texas, the reason so many people got foreclosed on with equity is they'd be like, you missed a payment, you're out. And so they're like, what? And they didn't have time to sell it, or they'd like try to put it on the market and they'd get an offer, but it would sell too fast. Now though, when they start rolling these back out in Texas in particular, I think that they are not going to say you've got 3 weeks. I think they're going to say 3 months from now, you're going to be back in foreclosure. 2 months from now, you're back in foreclosure. Next month, we're going to post you. And it's such a strong market, they'll be able to sell and capture that equity. So I do think there will be 60 or 80,000 units added to inventory. But I mean, I was just looking, I think there was, 300,000 or 400,000 sold in the last year.
Yeah, my buddy Ken McElroy talks about this stuff all the time on his YouTube, and he's talking about foreclosure inventory or all these things. But the market's eating up what, 1.5 million, the US market, 1.5 million units a month. So even if there's 3 million, which is high estimates, 3 million units that go to foreclosure, it's only 2 months of inventory. We're at under sub 1 month of inventory. All it does is level it out. I think you have to have interest rates to change this problem.
I interviewed a guy from NerdWallet this week, and I'm just going to pull up the stats. So like in May, there was in the state of Texas, 37,000 sales. So there is 1 month of inventory right now, 1.3 in Texas. Last month was 37,000. Month before that was 35,000. So if they take all of that shadow inventory and they split it up between 3 months, we only go from 1.3 months of inventory to like 1.6, right? So it's gonna get eaten up really quick. So at the very beginning of COVID, I thought there'd be this giant stuff. It took too long, essentially, and the market has performed in such a weird way. So yeah, I think that you need a lot of other factors. I interviewed the guy from NerdWallet, and he said there is 22 million people that believe they're buying a house in the next 12 months out of their survey. They did a survey. 22 million people say, I'm going to buy a house in the next 12 months. Last year, nationwide, 5 or 6 million houses sold. So that means you got 15 million people that believe they're going to buy a house in the next 12 months. There aren't enough houses. So 22 million people want to buy houses. 5 or 6 million people will actually be able to buy houses.
They only sell 5.5. I thought there was more. I thought they sell like 1 million houses a month, 1 million US bit.
I don't know. In Texas is one of the biggest states. There's only 37,000 last month. So in Texas in the last year, there's been 400,000 houses sold.
Houses.
Dude, let's do some Google
sold
over here.
In
it's a race to see whose fingers are fastest.
US home sales. Okay. Existing
homes. Did you do it? It says how many houses sold in the US 2020? 6.5 million homes. Per Google.
Yeah, 29 existing homes sold in the United States from 2005. So 2019 was 5.34. Is it existing homes or new home sales? Because like housing starts, what are housing starts? Like 1 million a month?
Oh, I don't think. Yeah, I mean that's what they need. So it says in 2020 there were 6.5 million homes sold in the U.S. and it's projected to be 7.1 million by 2021.
In 2020.
How many housing starts? 811,000.
Oh, 811,000 new homes. Okay. Maybe
So
yeah.
that little statistic for me. And
Interesting.
I know that those numbers sound weird. I was blown away when I'm interviewing this guy and I'm double checking his numbers as he's doing it because I'm like, no way. So that told me there's 4 or 5 times the demand of houses available. So if you get like interest rates will go up, that means affordability will go down. Maybe you're going to lose some people. Some people are going to get tired of trying to buy houses, so they're going to come out of it. We're going to get 2 months of inventory added to the market, but even if you doubled the 5.6 million on the market, you'd still have too many people that want to buy houses.
Well, yeah. And that's the thing. But okay, so affordability goes down, right? Interest rates go up, affordability goes down. Well, they still have to have some place to live. My rents are through the freaking roof.
Dude, our occupancy level on our single family rentals is higher than it's ever been. When COVID started, we were like 85 or 90%. And now we're at 99% occupied. It's really weird, man. I tell you what, when COVID hit, I was panicked. I was scared. We had just bought this new giant house the day that the world shut down. And I was like, I wanted my money back.
Yeah.
I called in my life insurance early. I was like, I need money because the world is about to end. And I'm like, and I own a foreclosure company, so that's cool. But then I haven't bought any foreclosures. And now, even though most of my businesses say, I believe foreclosures are healthy. I believe it's what the model needs for people to loan. And now I'm like, yeah, I can't believe that the housing market's going to keep going up. I also believe for a while, the housing market's going to keep going up. One of the things I was interviewing Sean O'Toole, and he's a smart guy. He founded Foreclosure Radar on the West Coast, owns Property Radar now. He's been, he predicted the real estate top in 2005, predicted the crash. He started the Foreclosure Radar company 2 years before foreclosures happened. Gotcha. Right. So really smart guy. And the big thing that he was talking about last week, he said, it's a great time to invest and a bad time to speculate. Right. So if you're buying a house with a good cash flow, with good things about it, not those funky floor plans, if you're buying in a fourplex right now that they haven't raised rent in 10 years, there's a good opportunity. You can buy it at a 4 cap, but it's probably actually a 6 or an 8 cap. So great things to buy right now, because if we see some weird correction, it's still great. Speculation is when it's bad. I don't know if me tying up new homes right now is speculation or not, but my downside is pretty low.
I wonder if developing new homes is bad. If that's speculation.
I don't know. So I'm
entry-level homes. Let's put it. I'm not building, I'm building entry-level price point.
Right now, and then when it comes down to like, am I going to put my money where my mouth is? What do I really think? Right now, I'm going all in trying to buy new homes and trying to buy land to develop new homes, because I feel like we have a year or two of runway before any sort of correction is substantial.
Yeah. And my thought process is I'm partnered with a builder and a builder developer, so I can get the cost done. So our cost basis on these homes is $105 a square foot, especially with lumber going down. That's priced out with lumber current prices. So $105 a square foot, even if it drops from $170 a square foot resale to $145 resale, I'm still sitting pretty freaking good.
Yeah. It's the one I totally agree. And that's how I'm acting right now. I remember in 2005 as home builders, there's a lot of other stuff that made it all go wrong. But I remember at these houses we were building in Santa Barbara County, there's like a 40 or 45% margin on them. And I remember thinking, well, the biggest correction in history was a 10 or 15%. Like, even if that happens, we're fine. And those houses end up selling for 30 cents on the dollar, 20 cents on the dollar. And so I'm not oblivious to the fact that anything could happen, and maybe COVID taught us that anything could happen, but I am betting on exactly what you're saying. I think the downside is not as big as the upside, and the downside is manageable and can be calculated. And the only thing we don't know is what we don't know. I think back in 2005, some people knew that the market was inflated because of silly loans. Well, not everybody did.
Well, if you look at it, so I'm looking at my graph here. So 7.08 million homes sold in 2005. Then it went down to 6.52, then 5.05 in 2007, then 4.12. But then it was in the 4 millions until 2012. Then it went in the 5, then 4, then 5s, all the way until 2020. 2021, they're saying is 6.45. So you say 20 people want to buy a home, or 22 million people want to buy a home.
Yeah.
Well, we've had inventory. I read an article. We're 5.5 million homes short. We're 1 year of inventory short in housing units. So if I'm short housing, I live where we're building. It's always been a linear market. It's turned cyclical the last 5 years, but it's not Seattle. People are wanting to leave the big cities. They're coming here. It's a good place to retire. 300 days of sunshine a year. People are moving from California, all these places. The demand seems to be pretty high. It's affordable. I feel like you're going to be pretty insulated. Now, if I was in Seattle, doing a 50 lot subdivision of $2 million houses, I might be shitting my pants a little bit.
I'm trying to figure out right now if I should try to buy one of these wholesales in San Francisco or not. I've been talking so bad about the cities, but then I'm like, there's got to be an opportunity where some stuff starts to come back. But we're doing affordable stuff, 45-minute drives from Austin, right? With that idea that the belief is Austin gets more and more expensive and people go back to the cities and they're willing to get the nightlife of Austin, but just a 45-minute drive away.
Yeah. Is Austin, does it get humid there?
Incredibly humid. The way more now during like the fall, it's pretty awesome. During July and August, we first came down here in July and August, and all my friends were like, we don't stay in Austin in July and August.
Yeah.
We go to Colorado, we go to other places. We travel out in July and August, but it's overall, I think the weather's pretty awesome here. There are a couple months where it gets pretty crazy, but yes, it's humid. But like for golfing, September, October, November, sometimes even December, like we're golfing those 4 months out of the year. The rainy season, it gets cold, in January and February. And then the rainy season is kind of February, March, April. But yeah, right now you go outside, you will start sweating in just a couple minutes. And it's only like 90 right now. So definitely it's humid. There's nothing like California weather, but we won't talk politics and that, but I don't like taxes and I don't like all the politics over there. But my poor wife, like a month ago, it rained here for like, a week solid, crazy thunderstorms. Like Texas has crazy thunderstorms. And we're like, where can we go? We couldn't go to Arizona because it was raining. We couldn't go to Florida because it was raining. We couldn't go to Cabo because it was raining. And she's like, well, look at this, Aaron, back at our house in Loomis, California, 95 degrees and sunny. And you got to get California off your weather radar because we don't live there anymore and it'll always win the weather battle.
Newsom's they approved the recall. So maybe you get somebody that changes that.
Dude, maybe, and I'll wish I had my ranch. I sold my giant ranch, my ranch that I was going to live in, retire, and then my kids were going to get married in the backyard. We got so bummed out during 2020. We were going to live in both places. We got back in August, and man, everything was closed. We had a bunch of friends over. It was the first time they had gone and seen anybody since March. They were like, "Is it legal to be here? Are we allowed to hang out over here?" And
my partner in the call center, because we own a call center in the Philippines. We have like 65 agents doing that, but he's from Kirkland but he's 23 and he's living in San Diego part-time. Half the time he flies back and forth, but yeah, I've visited him a couple of times. I would live in San Diego. I just don't want to pay the taxes.
Yeah. But it's tough to beat the weather. Same with Hawaii. Hawaii's beautiful. Taxes are expensive. So what's your next big thing? So you got your big developments now.
I have a lot of stuff. So we have a call center and a data company. And so that's grown like gangbusters. We have that with 2 other partners. Then we set a goal to buy 500 units in the next 18 months. Cause I think last year when this happened, my one good thought I had, because I kind of hit the brakes on buying flips, was inflation's going to go crazy. And so I went and tried to buy as many units as I could. And so I want to buy more. Especially if I can buy them below replacement costs, like we talked about earlier, do some development. And then I am kind of building the brand around building the list, because I found out from Jay Scott that they give 20% of their GP funds for fundraisers. And I'm like, I didn't know you could make money raising funds. And I had just came off this, my buddy had a development deal. He was giving me, I didn't know shit about it. He's like, I'll give his funding fell through. He needed $1.5 million. I raised $1.8 million in 10 days. And it was like people that I hadn't ever talked to about raising money from before. And so I'm like, okay. So, I'm trying to do a bunch of things, but where my common theme is I'm the person that puts the deals and the money together and the people in the room together. And I find a way to win with them. So that's what I'm doing.
And your niche, there is big value in that. There's big value in, every deal needs 4 or 5 different actors and parts and pieces in that. And every part is equally valuable because they're all different. And the bigger ones that you do, it's good to have a lot of different irons that you're working on and figuring out what's next. And yeah, I like doing our houses. I like our, part of our Roddy's foreclosure company was I took the software that I had built over years to buy it. And now we released that to everybody, building up we have our podcast. We've got, Rebus University for real estate agents, getting involved in Lead Propeller now, trying to redesign some of the websites and the promotions and stuff on that. And that stuff is all super fun. And so having a little hand in everything.
One that Danny's working with, the transitioning Lead Propeller?
Yeah, there's a lot of stuff going on in Lead Propeller right now. And so and I think we're going to start to see way more templates, way more websites, way more data-driven stuff. So here's an example. So there's a lot of websites out there that are these investor websites, right? And they say, so-and-so went and filled out the form and they want an offer on their house. It's pretty much what the form says. And sometimes it says, here's what they think it's worth and here's their phone number. Well, my other company and software that I have is all about public records data. And so you can type in any house in my other software and it'll tell you who owns it, how much they paid, what's their current mortgage, what I say their phone number is.
Where are you getting your phone numbers from?
We rebuy the phone numbers from there's like Skipforce is one of the places that we use.
You need to talk to me offline.
All right. I'd love to talk to you about it. So our big data set we get from First American Title it's
data tree stuff.
Yeah. We pay hundreds of thousands of dollars a year for the nationwide data set.
I'm in this game, so I understand exactly because of the call center. So I know exactly the language you're talking about.
So we're trying to take stuff like Lead Propeller a step further, where when somebody types in their address and you get that lead, that you also see in our system who the real owner is, how much they bought it for, how much their current mortgage is. So instantly when you get the lead, it says, Elliot Smith wants to sell his house and here's his address. And we'll go, but we don't actually show him as the owner of record. So you instantly know so much more. Or, hey, Elliot Smith says he's doing, and we show him as the owner of record, and he says he thinks it's worth 100, and we see that he owes 80 on it. You can instantly tell if the people are telling the truth or not, and then quickly be able to feed through those more without having to go through other stuff. So that's some of the exciting next level stuff on it.
Have you got Data Tree to give you their PDF documents for not $5?
Well, no, we don't. We only buy we have the full data set, right? So the full nationwide data set, we've got 4 different tables.
Yeah, but how are you getting recorded are you able to get recorded documents without?
You pay per recorded document.
Yeah, like it's stupid. It's really expensive.
Yeah. It's really, really expensive to get the document. All the software systems that are out there, you can like rebuy them, but the raw data is what we like for our analysis. I was always a data analysis guy. So any house in the country, I could figure out the comps instantly, everything else. And so that's the level of stuff that what I think some of those, like Lead Propeller was missing, and super excited to see what we do with that next. But I love real estate because it's really easy to make singles that every once in a while turn into hitting the jackpot. I love software and the other stuff more because that's more exciting and more like gambling. The real estate's like easy. So I still do mostly of the real estate stuff, but where it really drives me is my morning call with my software team for Roddy's, for the LP guys, for everything. Like that's the stuff, online marketing and Facebook ads and Google, that stuff's so much fun. It's just like learning something new.
Yeah. I love waking up every day and working on the call center and then working on big deals. I don't care about the houses. I don't care. I just want to put deals together, but the call center and the software side of it right before, that's why I had to jump on our call is we're working out. We sell a lot of skip tracing because we have a call center. So we have over 1 million, did over 1 million skips this month alone. And so we've tested our data against IDI, Skipforce, all the top data providers, and we crushed them like handily. Blind test against regulated. So there's 2 types of data. There's regulated data and there's unregulated data, right? So one's credit report data that you can't really sell for real estate investors unless you have a debt collector's license. But so that's gold star data. And so our data company, we've tested against IDIs, like our first phone number matches like 90% of the time to the gold star data. IDIs, 47% of the time, 45% of the time, 50% of the time. The reason why is our data company also has a regulated side. And so they're able to, they don't pull regulated data for it, but they can confirm like, hey, this works, right? And this is correct. So their accuracy is so much better and our pricing crushes IDI. So IDI owns like 90% of the market share. And my goal is to find ways to take that.
Yeah, it's super fun, exciting stuff. When software gets to be built by the people that use it and data gets to be built by the people that use it, there's a totally different outcome. have to call this quits pretty soon. I could talk to you for a long time. I can't wait till we get to hang out at one of the future Go Abundance events or something else. I know my son's about ready to crash in here again and be like, Dad,
what are you doing?
It's time.
Yeah. So, well, let's wrap it up. I want to tell you one thing offline after this, but I appreciate you hopping on this. And I think this would be a good show. I think people got a lot out of it. And, I think you're doing a lot of cool stuff. So where can people find you?
Yeah. Thanks for having me on here. It was fun to chat and get to know each other a little bit better. And if people want to come find me on Instagram, my name is I'm the only Aaron Amuchastegui on there. So you start to type out @Aaron, and then you get about through AMU, it'll probably find me. So I love talking to people. I love talking to people about all sorts of stuff. Just like Elliot said at the beginning, like it's a fun way to chat. It's a fun way to learn. People submit questions to me. I record them and release them on my podcast. And then I've got a podcast called the Real Estate Rockstars out there. We release 2 podcasts a week, and we have a ton of fun with it. So Anyway, thanks for letting me on, share a little bit of the story and sharing a little bit of yours with me.
Awesome. Cool. All right. Thanks, guys.